If you've been worried that your credit score might stop you from buying a home, this video is for you. A lot of first-time buyers assume their credit automatically disqualifies them, but that's rarely the case. Today, I'm going to explain what lenders really look at and why your situation might not be as bad as you think. Hi, I'm Art Rathel, and after decades in mortgage and community banking, I've reviewed thousands of loan applications. Credit is one of the most misunderstood parts of the home buying process. And once you understand what actually matters, the fear starts to fade. Today, we are going to look at three things: what your credit score represents, what lenders look for beyond the number, and what your options are if you don't have a score at all. Let's start with how credit is evaluated. When you apply for a mortgage, the lender pulls your credit from three major credit reporting agencies: Equifax, Experian, and TransUnion. Each agency gives its own score, and the lender uses the middle score, not the highest, not the lowest. That middle score helps determine which loan programs you qualify for and what your interest rate or points might look like. But the score itself is only part of the story. Your credit score is built from 5 key factors. Payment history. This is the biggest piece, so always pay on time. Outstanding balances, especially on credit cards. Try to keep them at halfway or less. How long have you had accounts? Types of credit. A mix of installment and revolving accounts. And inquiries. How many people have you gone to and how many pulled your credit? These factors work together to tell a story about how you manage money over time. And here's the part most buyers don't realize. A lower score with strong recent history can be better than a higher score with recent issues. Lenders look at patterns, not perfection. Now let's talk about something important. What if you don't have a credit score at all? That doesn't automatically disqualify you. Some lenders can use what's called alternative credit. That means looking at things like rent history, utilities, insurance payments, regular bills you've paid consistently for at least 12 months. It's not available for every loan program, but it can be a path forward for buyers who've avoided credit cards or traditional loans. Finally, let's talk about how credit affects your options. Your score can influence your interest rate, the cost of points, and which program you qualify for. But it doesn't decide whether you can buy a home. It simply helps determine the best fit. Think of credit as one part of the overall picture, not the whole picture. If you're worried about your credit, the best next step is to get clarity, not to assume the worst. I've seen buyers with past collections, late payments, and even bankruptcies move forward successfully because they understood their situation and took the next step. And speaking of next steps, the next video is one of the most important in the entire series. We're going to talk about the difference between being pre-qualified and being pre-approved, and why that difference can make or break your offer. This is Homebuyer 101, guiding you from curiosity to keys.